Ladies and gentlemen, we will discuss everything you need to know about Tesla in the shorter term here in this video. We will look at next week's events, including earnings and any economic data that we have to try to game out what this market could look like. But first, before we get into that, I want to share with you the clip from CNBC of BlackRocks CEO Larry Fink that says we could already be in a recession in this country.
Are we going to have a recession in the United States?
As I said on Monday at a talk that I gave at the New York Economic Club, I think we're very close, if not in a recession now. What may be...
You don't need that.
Good. What may be happening is a lot of people are buying in advance of the elevated increases, like lines around Apple stores buying iPhones and all that stuff. But I believe all the uncertainty is really making everyone pause. And everyone's wait and see. And so I think you're going to see this across the board and just say slow down until we have more certainty. Yeah. And, you know, we now have a 90-day pause on the reciprocal tariffs. That means longer, more elevated uncertainty.
Speaking of pauses, let's take a quick pause. Let's get the opening bell. We'll be right back to Larry for a conversation. Here at the big board, we've got Project Hood, that's a Chicago-based nonprofit aiming to reduce violence, build economic opportunity at the NASDAQ, the online pet pharmacy, Pet Meds. There's something you want to buy. Dog gets sick, man. You got trouble.
No doubt about it.
No doubt about it. All right, Larry, let's continue. I know we got a little bit of background noise here, but you're making the point. You obviously talked about this. Listen, we were talking about it. The uncertainty. So many CEOs we're speaking to. I've heard this now many number of times, similar to early days of COVID, like 5 years ago. Sure. I just don't know what's coming. I have nothing to expect, and so I'm keeping my head down. Is that a fair way to sort of characterize it?
I think that's a bad answer because today you need to run into the uncertainty and try to find solutions. Okay. So keeping your head down, I would not like that as an answer as a shareholder with any CEO.
Right.
I mean, to me, this is an opportunity to look for opportunities. And because of all our clients having uncertainty, we are spending more time with more conversation with more clients globally than any time. Our job now is to be, helping, calming, giving them ideas. So if a CEO said, I'm going to keep my head down.
Well, I guess that was the way one characterized it. But I guess it's the uncertainty itself that creates an inability to do long-term planning in terms of capital allocation.
There's
right
no
now.
question CapEx is falling right now until you have better understanding where should that CapEx go. But I do believe, as I said in my talk this morning, I do believe the mega trends are still with us, whether it's AI, data centers, infrastructure, the whole reorientation of our economy. So I think the mega force trends are not going to change by what is happening now. But maybe the execution of some of these trends may be delayed, maybe pushed out longer. But I still remain to be optimistic over the long run. Yes, we have to recalibrate. Yes, I do believe we're probably starting, if not, we're in a recession. Yes, I think the market is still underestimating how high inflation can get. If you factor in all the tariffs,
right,
you factor in all these other issues, it's going to be quite additive. I mean, I read in a report that if you just take the tariffs in the cost of home building, the average new home could be up as much as 26%. We already have a housing affordability problem.
None of this sounds any good to me, Larry. And it's all self-inflicted, by the way. None of it needed to happen.
This is not a pandemic. This is not a financial crisis. This is something that we've created. As I said also on Monday, the United States post-World War II was a global stabilizer. We are the global destabilizer.
Right.
Now, Larry, that's a very hard thing to say because I pride ourselves of being, bringing the leadership, bringing the conversations. But I will say the power of U.S. capitalism is still alive. I will say more and more times clients worldwide are asking for our, at least at the CEO level, they're asking for our vision, our views. They still want to engage. They still want to build. So I'm less. Long term, I'm less worried about some of these issues, but in the short run, I'm petrified at some of these issues.
Petrified.
Well, let's speak of being petrified. You and I are old enough to remember when Nixon went to China, opened the door,
or the gold, or walking away from the gold standard.
Right, the same couple of years. And I think that there was tremendous anxiety then going the other way. Did we really think that we could have a great relationship with Mao, who was a mass murderer? Did we think that we could actually do business with China? We did $1 billion with them the next year, and then next thing we know, we're doing $100 billion. Now we're doing $438 billion, and now we want to do zero. How does zero impact our country?
Well, we've had now 20 plus years of supply chain creations, and another economic force, Jim, post World War II was consumerism. So we built the whole foundation of economic policy around consumerism, providing Americans with the cheapest products that could. And so that was the foundation. Now, did that come at a cost? That some of our communities were decimated, where they lost jobs? Absolutely. So maybe we went too far on the whole concept of consumerism. But let's be clear. The major economic foundation was based on consumerism. And so we wanted our companies to go around the world to find the best places to provide the highest quality at the cheapest prices so we could consume more. And we always thought that type of consumption was the most progressive form of economic behavior. More people could have more. And that was one of the fundamental reasons why the United States was the leader.
Yes.
Because our citizens were huge consumers. By now changing this equilibrium, it's going to be harder to consume. And we're going to have elevated inflation.
I mean, if that doesn't just about sum up what the near term could look like, I don't know what else will. When someone like Larry Fink of BlackRock is that cautious, using words like he's petrified, it is time to not take excessive risk. Now, we've heard about a recession, we've heard about all of these things, but we're not actually pricing them in, which is kind of the weirdest thing. Like, the S&P is not priced for a recession at 525. You're just not, okay? We've talked about this before many times here on the channel. If you just use simple math, say the S&P has $201 of EPS this year, which honestly, with tariffs, a tariff-induced recession could be generous, but we'll use that. If you say the average recession bottom multiple is 15, roughly, that's about 301 on the SPY. That is substantial downside from current levels. Like, that is no joke kind of downside. Okay, from here, I don't even have the chart pulled up far enough, and you're already looking at 37% downside at the 330 level. So you're looking at 40% plus downside potential from current levels. You're not priced for that. You're not pricing in that actual risk. And honestly, I'm alarmed with what we've seen this week. I mean, you had a 10% rally on news of a 90-day pause on these tariffs. And then yesterday, you were down a lot. At one point, you were down over 6%. I was expecting much more of a risk-on nature to that announcement. It lasted for like 2 hours, and then in trading terms, and then was over with. I think Larry Fink has a great point here. The damage is already done. A 90-day pause just means you have another 3 months until you know how to outlay capital and how to invest capital and where to move, production. So, did anything get solved here? Not really. It just got delayed, which in the case of a recession is not great. Now, the other side of this is to say, how are we going to get bailed out of this, right? Where does the damage end? And unfortunately, there's no easy solution to this because the Fed is in real time making a policy error. The Fed in real time, almost every day, is more scared of inflation than the economy weakening. And they are in no rush. They say it themselves, no rush to come in and help the economy if inflation moves higher. And it will to a certain extent. I mean, if you have 100% tariff on China, 125% tariff on China, you're going to be able to raise prices somewhat, but you're not going to be able to raise prices enough to offset that. Not even close. Like maybe 10%, 15% maybe is what you'd be able to raise prices without killing too much demand. Okay. But you're going to have to take it in the margin. Companies are going to have to lay people off. That is a huge problem. So it's like these issues are compounding at this point. It's like Trump pushed things so far, so fast, that there's almost no way to walk it back at this point. Unless he were to come out and just cancel all the tariffs. Say, hey, it's a baseline 10% for everyone. That's it. There's no more negotiations. We're done. 10% baseline. Or 15% baseline. That would be seen as very positive. That would create more certainty. But again, in this environment, with this administration, it's not going to happen. And you're going to have a recession. Now, it could take some time before that recession is ultimately, materialized. You're talking July, August would be the earliest in which we would know if we're actually in a recession. We would have some pretty strong signs of that by like May, June. But July, August would be the first time we would actually know if we're in a recession. By then, what's going on, really hard to say. So unfortunately, this volatility, this shit show is not going away anytime soon. And I think a lot of people are under the impression that it's all going to be fine and we're going to go back to business as usual, markets moving higher. I think you want to have cash. You want to be out of margin. You want to be ready to do buying when those opportunities do come about. I mean, everyone always, overestimates things in the short term and underestimates things in the long term. So we're all overestimating or maybe underestimating in this sense what could happen to markets, right? Short term. Like nobody really thinks we could fall another 40% from here. But that is the reality if we go into a recession. Now, the US consumer tends to spend no matter what. Okay, that's a strong force to potentially try to help prevent a recession. But it's really hard to avoid this recession. According to Larry Fink, according to Jamie Dimon, some of the most well-connected individuals in the world, those are the guys that I'm listening to and I'm saying, man, maybe we do have a bigger problem on our hands. Again, a 90-day pause in tariffs only creates more uncertainty. Until we start to get some deals done, it's going to be hard to really stabilize things in the markets too much. And I think that's what you're saying right now. There's such a wide scope of potential outcomes. Nobody knows where to value markets. Nobody knows where stocks should be trading at. Like, where should Tesla be trading at in spite of this? I mean, do we go into a recession? If we do, then how low is enough to price in the risk? Right? What's going to happen to consumer demand for autos and for, discretionary items like iPhones? Nobody knows. Okay. And that's the difficult part about where we are right now. Now, if we look ahead to next week and what we have in store for economic data, lots of soft data, consumer inflation expectations coming out Monday, 11 o'clock in the morning. Bunch of Fed speakers, Fed Bostic, Fed Harker, Fed Waller, and Fed Barkin will speak on Monday. On Tuesday, you will get export prices, import prices month over month, New York Empire State Manufacturing Index, Fed Barkin that will speak again, and GDP data coming out from China. On Wednesday, you will get business inventories, the Bank of Canada interest rate decision, industrial production, retail sales excluding autos, all kinds of smaller data sets there. Jerome Powell is also scheduled to speak on Wednesday. Looks like he is scheduled to speak at about 1:30 p.m. So yeah, we've heard a lot from regional Fed speakers, but what the markets really care about is what Jerome Powell has to say, because that's a little bit more definitive. And what we've heard from Powell on the press conferences, now the last two of them, is he's pretty nervous about the economy, right? he's kind of nervous about inflation as well. But it seems like Powell's a little bit more nervous around the economy than other Fed, Fed officials. Now, building permits, housing starts come out on Thursday. Continuing jobless claims and initial jobless claims will also be coming out. That could take a little bit more precedence here now that we're trying to figure out, like, hey, are we going into a recession or not? Initial jobless claims tends to be a pretty good real-time indicator, not as lagged behind as a lot of other things are. And then on Friday, we really don't have much. You have a speech from Fed Daily, but that is pretty much it. Next week, as far as earnings, we will get earnings Monday morning from Goldman Sachs. Monday and after hours, Applied Blockchain. Tuesday pre-market, Bank of America, Citi, Johnson & Johnson, PNC, Albertsons, Ericsson, Rent the Runway, and some others. Tuesday and after hours, United Interactive Brokers, JB Hunt. Wednesday pre-market, ASML, US Bank Corp, Abbott, Progressive. Wednesday and after hours, Alcoa, Bank of Ozark, CSX, Kinder Morgan. And then Thursday is your big day. You have TSMC, United Health Group, Huntington, American Express, and Ally Bank, and Fifth Third Bank Thursday morning. Thursday and after hours, you're going to have Netflix. So again, Netflix not really affected by the tariffs as far as we know. TSMC is not really affected by the tariffs as we know, but it will tell us a little bit more about, especially TSMC. What does AI demand look like? Is that some CapEx that's being pulled back right now? Or is it continuing business as usual? AI has been such a big component of our markets. We haven't even really thought about, like, what if AI investments start to die down? What if that's where some of the cutback is right now? I think that would be a little problematic to markets, to say the very least. Now, again, Tesla does not report this week. It's going to report the week after. And that's obviously going to be the huge catalyst for Tesla. We want to know, are they still on schedule to launch their cheaper, lower priced Teslas? Robotaxi services, how is that going to launch in Austin? Are we going to get other cities this year? All of that, we kind of already know of, will be the important catalyst for Tesla's earnings. But unfortunately, I don't think we're going to get a whole lot of answers and a whole lot of guidance from companies. Like Jamie Dimon said today, I think we're going to get a lot of companies that don't provide any guidance. And then it's going to be kind of just up to interpretation on, what things are going to look like. And that's, again, more uncertainty, which markets can handle bad news pretty well. I mean, Trump nuking the global economy is only, and markets only falling 15-20% is actually pretty good. But this uncertainty is going to be hard to deal with. And I think that's why Tesla came under pressure today, and a lot of other stocks did as well. And unfortunately, I don't think that pressure is over. If anything, there's reasons for that pressure to kick up a notch, especially as reports came out today that even the first tariff deals are still a couple weeks away. I mean, if that's the case, then we're not going to know much fast at all. And what's going on with China? We want to see, is China going to negotiate with us? Are they not? Are we just going to cut China off from business forever? Obviously, there can be a lot of different outcomes there, and each one of those outcomes has a very different potential outcome for the U.S. economy and for inflationary effects. So let me know what you guys think about this down below in the comment section. Again, there's 3 things you want to do right now. Be wary of recession stocks. If there's companies that are unprofitable that need to raise capital, this is not the market for that. That's not good. Specifically, stocks that are vulnerable towards a recession, that are super discretionary, things like that, that are unproven tech, tech without a product, essentially. Absolutely, that's a no-go in my personal opinion at these levels. If we fall another 20, 30, 40%, that's where you pick up those stocks for, crazy good deals. Okay. Number 2, you want to have no margin or very little margin. That's my thought. I'll leave it at that for obvious reasons. Number 3, you want to have as much cash as possible. If you don't have cash ready, then every week you need to be picking up more shifts at your work. You need to be doing whatever you possibly can, door dashing, food, Grubhub, whatever you guys do in your area, Uber Eats, to make as much money as possible, because each $100, $1,000, $500 is massive. If markets fall another 20, 30, 40% from here, your money is gaining buying power, right? It's becoming worth more in purchasing terms every day the markets fall. And you want to be able to take advantage of that. In terms of where I think Tesla could still go, again, in a worst case scenario, you could fall to $50. That's like really bad though, and that's not my expectation. I think 100 to 130 could definitely be on the cards. And I think a test of 180 is almost certainly going to happen at some point. Tesla's currently around $245 per share. So that's pretty significant downside. And I think it's worth, shining a light on this risk. Even if it doesn't happen, you need to be prepared and know the potential outcome. So with that said, ladies and gentlemen, let me know your thoughts on this down below in the comment section. Have a fantastic weekend. Sorry to ruin it if I ruined it. And I will see you in the next one.